Good morning, girls. This is Priya Noel, and I'm going to handle the subject called life and general insurance, okay, for the banking specialization girls. So we are going to start off with the first chapter today. So this is your syllabus. I've already sent the syllabus for y'all. Okay, so you would have looked into the topics of the syllabus. So we are going to start off with the first chapter today, introduction to life insurance. So that's your unit 1. Okay, so before we go in details with this particular chapter, so insurance, okay, especially as far as your subject is concerned, life and general insurance. Okay, so these are the two types of insurance, okay, so which is possibly available for people to be insured with. Okay, so this particular subject tries to teach you the technicalities of insurance. Alright, so what exactly is insurance and what are the different types of insurance, principles of insurance, how to go about insurance, and what are the profitability of insuring oneself. Okay, so be it life or be it for a general purpose. Okay, so all this we are going to see in detail. So insurance is another important topic or another important business, okay, so which is familiar in commerce today and which is most successful as well. Okay, we have a lot of insurance companies which provides insurance, and that is one of the known businesses in today's business scenario. Okay, so therefore we're going to go in details with this particular topic, and we are going to learn, okay, as to what exactly insurance is and the different types of insurances available for us. Alright, so we will start off with the first chapter, introduction to insurance. So first of all, let's look into the meaning of insurance. Okay, so there is one particular meaning which is given in your textbook. See, as far as textbook is concerned, please go ahead referring Himalaya Publishing House, okay, Life and General Insurance, which is written by Manjula, Marva Mona and Narasimha Murthy. So this is the prescribed textbook for from the university, so you can go ahead referring this. So in case topics are not available in this textbook, I will also refer other textbooks, and if I am referring, I would possibly give you the notes for the same. Okay, so let's look into this topic. So what is the meaning of insurance? So as far as insurance is concerned, so you have one textbook meaning which is given to you here. Insurance refers to a contract or a policy which an individual or entity in which an individual or an entity receives financial protection or reimbursement against losses from an insurance company. So the company pools clients' risks to make payments more affordable for the insured. So this is one of the meanings of insurance. Okay, to simplify the meaning of insurance, let me give you an explanation as to what exactly insurance is. Okay, so insurance is a contract between two parties. Alright, so there are two parties who are involved in this insurance contract. It is called as a contract. It is an agreement which has got legal implication. Okay, so this particular contract is between two parties. One is the insurer, another one is the insured. Okay, so this contract between these two parties in which one party, okay, agrees to undertake the risk of another in exchange for consideration. So who is the party who is agreeing to take up the risk is none other than the insurer. Okay, so insurer agrees to undertake the risk of the insured. Alright, in exchange for consideration. Consideration is nothing but it's a payment or a compensation, okay, which is known as premium, and he promises to pay a fixed amount of money to the other party on the happening of an uncertain event, okay, or after the expiry of a certain period. This is in case of life insurance. Okay, now in case of general insurance, the other party will be indemnified. He'll be compensated on the happening of an uncertain event. Okay, in most simple words, insurance is nothing but it is a contract between two parties, girls. So the two parties are insurer and insured, wherein the insured will agree to undertake the risk and pay the compensation in case the insurer undergoes a risk. Okay, for which the insurer has to continuously pay something called as premium. Okay, till a certain period of time he is supposed to pay premium. So this particular contract between these two parties will promise to pay a fixed amount of money to the other party on the happening of an uncertain event. This is in case of life insurance. Okay, if supposing it is a general insurance, then the same procedure, it is a contract between two parties, wherein again is just like life insurance. Here also the insurer will go on paying the premiums to the insured. The insured will go on paying the premiums to the insurer, and then when he is undergoing some kind of loss, he will be compensated by the insurer. Is that clear? So this is what is the meaning of insurance. Okay, there are two different types of insurance which we will go in detail later. So one is life insurance and other one is general insurance. So this is the meaning of insurance for you all. For the same, I will definitely forward the notes for you all, so you can look into the notes for your further clarifications. Alright, so now in today's class we are also going to see another topic, that is principles of insurance. Okay, principles of insurance. I have jotted down the points for you all here. Okay, the notes for the same will be sent on WhatsApp, so you can check with the notes. Okay, if you have any doubts, you can always get back to me. Okay, so this particular topic, principles of insurance, is very important. So later on I'll come back to the importance of insurance and other things. Okay, so first principle of insurance. Okay, so these are certain principles, these are certain rules, regulations as far as an insurance contract is concerned. Okay, so as far as an insurance contract is concerned, you are supposed to follow all these principles, okay, or rules and regulations. So let's look into what are these rules and regulations. So first rule says principle of utmost good faith. Okay, so what is this principle of utmost good faith? It is nothing but, this is the primary principle of insurance. The very basic principle of insurance is utmost good faith. So what is the meaning of utmost good faith means? Now the insurance contract, okay, must be signed by both the parties. Who are both the parties? One is the insurer and other one is the insured. Both these parties should sign the insurance contract in absolute good faith. Okay, so what is this faith? Faith is nothing but a belief or a trust. The contract should be signed trusting each other, believing each other, and the person who is getting insured must willingly disclose and surrender to the insurer his complete information, and that information, whatever he is surrendering, should be true and fair, okay, regarding the subject matter of insurance. Alright, supposing he is insuring his life, then he has to disclose all the information regarding himself. Supposing he is insuring his house, then he has to disclose all the details regarding his house. Or if it is bike, now everything, whatever he is insuring, he is supposed to disclose all the information, and all the information needs to be true. And this particular contract should be signed between both the parties with full trust and faith. That is what is called as principle of utmost good faith. Okay, so this person insured should not hide anything from the insurer. He should disclose all the facts and figures. Is that clear? So this is the first principle. So let's go to the second principle now. Principle of insurable interest. So what is this principle of insurable interest? The principle of insurable interest states that the person getting insured must have insurable interest in the object of insurance. Okay, meaning a person has an insurable interest when the physical existence of the insured object gives him some gain, but its non-existence will give him a loss. Meaning, when the person is insuring the property, Why will he insure? He will insure only because that property, that particular thing, object is giving him some income. Okay, when it is not going to give him any income, he is not going to insure that particular object. So that is what is called as insurable interest. Did you understand? See, I will give you an example here. The owner of a taxi, okay, wants to insure his taxi because he is going to get some income out of that taxi. Okay, but if he is going to sell the taxi to somebody else, do you think he will still continue with the insurance, or he is going to insure that particular taxi? Definitely not, because it's not going to give him any income. So that is what is the meaning of insurable interest. He should be getting some income out of that, because of which he will be taking the insurance for that particular object. Okay, so that's about the principle of insurable interest. If it's not going to give him any income, if it's going to give him losses, then he will not insure. So that's the second principle. Right. The third principle is principle of indemnity. Okay, this is one of the important principles. Okay, principle of indemnity. So what does this principle of indemnity means? In this insurance contract is signed only for getting protection against unpredicted financial losses. Okay, which will be arising due to the future uncertainty. Meaning, the main insurance contract is entered into only to indemnify, compensate the loss that which is going to be suffered in the future. Okay, so the insurance contract is not made for any profits. It is not made for making any profit. The main purpose of insurance is to get compensation in case of loss or damage. So that is what is called as a principle of indemnity. You cannot enter into an insurance contract just to gain some profit. Okay, it's not for profits. It's purely not for profits. It is only to give a cover, okay, a compensation for the losses that which is suffered by the party, the client, the insured. Did you understand? So that is what is called as principle of indemnity. Next one is principle of contribution. Okay, principle of contribution. So what is this principle of contribution means? So it applies to all contracts of indemnity. Okay, those contracts which requires to be compensated for the losses, damages, only for such kind of contract it is applicable. So if the insured has taken out more than one insurance policy on the same subject matter, okay, so that is what is called as principle of contribution. This principle of contribution will appear only when the insured has taken more than one policy on the same subject matter. Okay, if he's got 2 policies or 3 policies, insurance policies for the same subject matter, only then this principle of contribution will come into picture. So according to this principle, the insured can claim the compensation only to the extent of actual loss, either from all the insurers or from any one insurer. Okay, supposing if any one insurer pays the compensation, then that insurer can claim the reward, okay, the proportionate claim from the other insurers. Okay, I'll give you an example to make you understand this point more clearly. So say for example, a particular person called Mr. X has insured his properties, okay, his particular property, say house, okay, for rupees 10 lakhs with 2 insurance companies. So say one insurance company is A, another insurance company is B. So if he has tried to make an insurance policy with 2 companies for the same property for an insurance of rupees 5 lakhs. Now supposing his property is destroyed, and if he is claiming for compensation, say for example he can claim compensation, say for example the loss is up to 1 lakh. Okay, the loss is up to 1 lakh. Now he can claim compensation from both the insurance companies only up to 1 lakh, not more than that. Okay, you can have insurance for a subject matter, more than one insurance you can have, but whatever is your loss suffered, only to such an extent you will be able to claim the compensation. And one more thing is, supposing if there are 2 insurance companies, like I told you in this example, the person has claimed insurance both from A and B. So supposing a company itself has paid the full compensation of rupees 1 lakh, whatever is the loss suffered. Now what a company can do is, a company can claim the proportionate contribution from B company as well. Okay, say if the company has paid full 1 lakh, they can claim 50,000 from the other company. Did you understand? So that is what is called as principle of contribution. When there is more than one in one insurance company, then those insurance companies, whether it's 2 or 3, all those insurance companies together will contribute and make good the loss that which is suffered by the insured. Is that clear? So that is what is called as principle of contribution. So next one is principle of subrogation. Okay, so what is this principle of subrogation? Okay, so principle of subrogation means substituting one creditor for another. Okay, so the principle of subrogation is an extension and another corollary of the principle of indemnity. That is, it also applies to all the contracts of indemnity. Now, according to this principle, so what happens is, when the insured is compensated for the losses due to damage to his insured property, then the owner the ownership right of such property shifts to the insurer. Okay, see, in simple words, this insurance is applicable only when the damaged property has any value after the event. Okay, so the insurer can benefit out of the subrogation rights. So let me give you an example for this. Say for example, one particular person has insured his house. Say Mr. X has insured his house for some 1 crore. Okay, and his house is completely destroyed by fire because of his neighbor. Okay, so his house is completely destroyed by fire because of his neighbor. Now what the insurance company will do is, so whatever is the insurance that is claimed, 1 crore, now for that the compensation will be paid by the insurance company. But what the insurance company will do is, the insurance company can file a case on the neighbor. Okay, because of him only the losses occurred. Okay, because of the neighbor only the losses occurred. Say for example, the neighbor was careless, and because of that his carelessness, the fire mishap has happened okay, in the building, and the entire building is completely burnt up. So what the insurance company can do is, he can file a case on this neighbor and claim for more than 1 crore rupees also. Supposing the insurance company wins the case and he gets the compensation from the neighbor, then that compensation cannot be claimed by the insured, because the insured is already paid 1 crore rupees. Okay, so this is what is called as a principle of subrogation. Alright, so in this principle, according to this principle, whatever is the claim, okay, that which is made, and if it is compensated, there ends the insured's matter. Okay, so later on, if the insurance company has got a compensation from the neighbor, that compensation will completely belong to the insurance company. The insured has no right over the compensation which he has claimed. Okay, so that is about the principle of subrogation. So the next principle is principle of loss minimization. Okay, so what is this principle of loss minimization means? See, the insurer, the insured, okay, the client should make all possible should take all possible initiatives to mitigate the loss that which he is suffering from the the damage. Say for example, in Mr. X's company, there is a fire mishap, and he is very much present when the fire mishap has happened. So what he should try to do is, he should try to minimize the loss, okay, that which he is going to suffer because of the fire. Rather, you should not just keep quiet thinking that he has insured the company, so whatever is going to be the loss, the insurance company will give. He should not just fold his hands and look at the building, like getting destroyed in the fire. Rather, he should mitigate meaning he should reduce the intensity of the loss. He should try and take all possible initiatives to reduce the loss that which he is going to suffer. If he has not taken any initiative to reduce the loss, and then further if he is going to claim compensation for the entire loss that he has suffered, probably then, according to this principle of loss of minimization, company will not pay him the complete compensation, because he has not taken any initiatives to reduce the intensity of the loss. Is that clear? So therefore, the principle of loss minimization is where he should try taking all possible initiatives to minimize the loss that which is suffering. The last one is principle of Cos Approxima. So what is this principle of Cos Approxima meaning? This is finding the nearest cause for the damage, nearest cause for the loss. Okay, now the causes for the loss also needs to be insured. If the causes for the loss is not insured, sometimes the insurance company will not give compensation. Okay, so whatever could be the proximate means proxima is nothing but it is closeness, proximity. So whatever is the nearest reason, whichever is the closest reason, so that reason will be taken into consideration, and that if that is one of the insurable reasons, then your insurance will be covered. So say for example, so one example is given in your textbook. A cargo ship, okay, gets punctured due to rats. Okay, so a lot of rats, and these rats trying to get into a cargo ship, and they the rats can cause a lot of damage, and they can break open a lot of things. So like that, they punctured this particular cargo and they entered the cargo ship, because of which later on when the cargo ship was on the sea, then a lot of sea water entered, and there was a big damage which is caused to the ship. So you can imagine the ship can even go in for sinking and other things. So this was the reason, okay, for the damage, the entire damage to cause. And later on when the insurance was claimed, okay, for the loss that which happened, so they would check on the Cos Approxima, that is the nearest cause for the damage. So the two causes here, one is the rats, okay, another one is the sea water entering into the ship, right? So according to this, now the rats is something which is not the company is insured for. Okay, the insurance company has not taken into consideration the reason of rats. Okay, but the other reason is the sea water entering into the ship. So that can be taken as the Cos Approxima, and for based on that particular reason, the insurance can be given. Did you understand? So the compensation can be claimed. If none of the reasons are there in the insurance policy, then sometimes it's very difficult to claim the compensation. So they look into the Cos Approxima, the nearest cause for the damage cost. So these are the various principles, girls, of insurance. It's quite an important topic from examination point of it. So the notes regarding the same will be sent. You can also check for the notes in your textbook. I will also send that. I've already told you which publisher to refer. So in case you have any doubts regarding the same, you can please get back to me. Alright, so you can, if you don't understand something, if you want me to repeat anything, I will always do it. Thank you.